I'm going to prepare you for Monday's open and tell you exactly where this market is headed, especially after the recent news we just heard about President Trump potentially raising 50% tariffs on the EU. We're going to dive into that, and then we're going to dive into 5 stocks you should be adding to your portfolio that we're doubling down on, and these stocks are going to make many millionaires this year. So we're going to take advantage of that, but let's go ahead and dive into it. As you can see, the portfolio is at 925,000. If you do want to see me turn this into 10 million, make sure to be subscribed down below. But as you can see, we're up 107,000 for the month, making new record all-time highs in the portfolio. So very happy about this, considering that QQQ still hasn't recovered back to all-time highs, but I'm not the only one doing this. As you can see here in my Discord and Options Trading University, we just had a client in the first 2 weeks of the program hit $12,000 in profit. Amazing job there, $1,400 here. Jason hit about $3,475 there. Today, John hit $14,555 on some Tesla leaps that we talked about. And then Brian here made $8,000 within the first month of trading with us. So amazing job. And if you do want access to my trades, I do have that here in the Discord, as well as my leaps, entries, and exits. That'll be the first link down in the description. We do have 121 high-level mastermind individuals in here, and I will be closing down lifetime access to this. So if you want to be grandfathered in, make sure to be booking a call before June 1st. Obviously, we're booked out to mid-June, but that's totally fine if you book a call now. So let's go ahead and dive into it, okay? So as you can see, Trump calls for 50% tariffs on the EU. He says he's not looking for a deal with the bloc. This was directly after he threatened to impose tariffs of at least 25% on Apple, okay? So it wasn't looking good for the market at the open today, all right? He said if the company does not start manufacturing iPhones in the United States, he is going to be implementing those tariffs. So I'm gonna show you exactly what I did, but let's talk about it. Like, what is this going to do? So we already saw QQQ kind of price in this news, okay? News is priced in. We saw a nice dip today, and we'll go over the charts. But I think the bigger issue is really the 90-day pause on reciprocal tariffs between the US and China, okay? We're already seeing a lot of progress towards, making a good deal with China, and the current tariffs are lower, but this will resume August 12th. So we have a good 2 months, right? We have a good 2.5 months until those tariffs come back on. So right now is the best time to ride this uptrend. I do think the market is going much higher from here, and I'll kind of explain why, okay? So again, 2.5, almost 3 months until the China tariffs, the pause is being released, and we'll kind of see the volatility and news around that in August. But for now, we just ride the price action and what we see. As you can see on the CME FedWatch tool, this is something that I look at as far as interest rates, okay? If interest rates are being cut, the market will continue to go up. Consumers and businesses will be able to borrow at cheaper rates. That's good for the market. More money and liquidity into the equities market. We see that, again, September, that is kind of pricing in a cut there, September, and then the next one being in December. So two rate cuts are being priced in still for this year. And then actually this changed today. So we do see a third rate cut next year. Okay, we have one rate cut coming in March, another one coming potentially in September, and then a potential third one next year coming in October or December. So this is new. The 5th rate cut kind of came back into the CME futures, okay, the interest rate cut futures. So this is a good sign. Interest rate cuts, that's what we want to see. We do not want to see rate hikes. That would be bearish for the market. So right now I'm very bullish. The next CPI report is on June 11th. So again, we're about two to 3 weeks out from that. So we could have a nice run from here. So we're going to take a look at the charts. QQQ, since the beginning of May until today, okay, or actually earlier this week, went up about 8.68%. Okay, right now we're currently up about 6% from May 1st. Okay, so it's very probable that in the next 2 weeks, we will see another 6% run up back to all-time highs at 540. Now, why do I think that's going to happen? Well, we already priced in a a potential 20 to 50% tariff increase on the EU that was priced in today, and buyers stepped in, right? The market tanked and buyers stepped in. They're buying the dips. They're really not letting this market fall. So what I see happening next week potentially, and I'm hoping for this to happen, is that we actually get a nice pullback down to this $500 level, okay? $500 level is kind of what I'm expecting, and I'm going to take advantage of that, as much as I can with the remaining cash that I do have. Now, worst case scenario, if there's some worse news that comes out, sure, we could bounce off this 493, but not very probable. I think this $500 level is the most probable. But again, on Monday, we could open up higher because we had a nice strong finish today. So I do see us bouncing back up and going to that 540 level in the next few weeks. All right, that's still my prediction there, and it's kind of standing true. So we're just going to be on the lookout. VIX, as you can see, is at 22. We did see a nice spike today all the way up to 25, something that I talked about in previous videos. Didn't expect it to come today, but it was very quick. It was short-lived. Didn't really get to take advantage of that opportunity too much, but again, I do think that this VIX the fear will subside, and it will kind of come down to this sub $15 level. Okay, so that's kind of what I'm expecting. But how can we play this volatility? How can we actually take advantage of this remaining fear that's here? Because there still is a very good level of fear in the markets. In fact, if you follow my VIX allocation levels, we are technically between 20 and 25 on VIX. So you could be anywhere from 75% to 90% cash allocated to positions and just be sitting in 10% cash, which is exactly what I'm doing. I'm actually 8% in cash right now as of today because we took advantage of a couple stocks, okay? Another thing of why I'm so bullish right now, and I'm not a perma bull by any means. I just follow market direction. I follow the trend and I follow the fear and take advantage of the fear. Now, one thing that we see when we're in a bullish trend is high flyer names like Oklo and Qubits, okay? These companies perform horribly during market downturns or potential recessions on the future, right? On the front coming. As you can see, like Qubits or QBTS, this stock, negative earnings, right? These are all negative earnings stocks, horrible fundamentals, but a lot of momentum. A lot of people like these stocks and believe in them in the future. As you can see, there was some uncertainty coming into the Trump administration in January, and this thing just shit the bed, okay? This thing absolutely tanked and and had a little bit of a run up in February, and then once the market tanked, this thing went back down, okay? Look at this thing now, just absolutely skyrocketing. We do not see this type of action in a bear market or in a potential bear market, okay? This type of stuff doesn't happen. If you've ever lived through bear markets, like in 2022, which was the most recent one, this type of stuff didn't happen. If you look at Oklo, look at this thing, just absolutely skyrocketing. But back in February 21st, right, when this whole tariff situation came out, this thing just shit the bed. It just absolutely went down and tanked. And, no one wants to be in this type of stuff. No one wants to be in the high flyers with zero fundamentals and no earnings, right? No one wants to hold these stocks through negative times. So we're seeing a lot of this. Look, New Scale Power Corporation, SMR, this thing absolutely skyrocketing. Again, back during the tariffs news, this thing just absolutely tanked. And then there's a couple other like TEM and BBAI, Big Bear AI. Okay, this thing isn't really taken off, but as you can see, absolutely tanked, and then now starting to gain a little bit of momentum going into the AI news coming out. So another reason why I don't think we're going to be testing previous lows back here, definitely not testing those, but I do think, hey, on any bad news, we get a flush to 492 and we bounce off that support, okay? So that's like absolute worst case scenario, but I do think we're going much higher from here. So with that being said, if you do want to make multiple six figures trading options and you want to join my mentorship where we have 121 high-level clients in there trading and sharing ideas, then go ahead and book a call down below. Again, I will be ending the lifetime access. It will be a yearly program after that, after June 1st. So make sure to book a call. And if you want to watch some of our recent testimonials, I'm uploading a new one by the time you watch this video of a client that made his investment back, actually 6 times his investment back in literally 30 days of joining, okay? Also, if you want my free trade ideas, make sure to be following my Instagram. I go live there. I DM everyone back. And I do have a free newsletter as well where I give trade ideas. So make sure to be subscribed to both of those down below. But let's go ahead and jump into the first stock. The first stock is Apple, okay? We got to take advantage of this fear. I leaned into this fear today to acquire a wonderful company. Fundamentals are absolutely phenomenal on Apple, okay? We saw the PE ratio when everyone was loving this stock back in December of 2024. Everyone was loving buying up this stock that ran this thing up to 260, okay? If you take a look, 260, and the PE ratio went all the way up to 42. We're at a 30 PE ratio on Apple, okay? This company is not going anywhere. So what I did today was I actually sold 2 cash secured puts at the 190 strike, a little bit more aggressive, 35 delta to collect $1,075, okay? So, a good 2.7% return there on my money in 30 days and collecting nice income. That is definitely a play that is viable for Monday as well, okay? If you want to be more aggressive, again, you go to the June 27th, you sell the 190s. That's the one I did. It's a 37 delta right now, so very aggressive. But for me, I'm fine getting assigned at that price. If you want to go a little safer, you'll get a smaller return, maybe 2%. You could go down to the 185, right, or the 180s. So those will be kind of a safer play. I wanted to go more aggressive on Apple because I believe in this company, and for the long term, I think it's a great stock to have in the portfolio. The next stock is going to be Nvidia. Earnings are on Wednesday, okay? So we had a nice little pullback here to take advantage of if you wanted to get into some leaps or some cash secured puts. Now, I think cash secured puts are going to be a safer bet here. For me personally, I wouldn't do the leaps because we are still very close to the upper Bollinger Band. We're not quite to this middle Bollinger Band or lower. And, VIX is at 22, so it meets that criteria, but I just wouldn't risk it here on the leaps. I think a cash secured put, an aggressive one, is going to be a better play. So let's go ahead and dive into that, okay? We're going to go to my positions. As you can see, I already have some leaps that I've been holding since January. This is why we go out 365 days or more, because if you're absolutely wrong on these, you could hold them for a long time like synthetic stock and just wait for the stock to go back up. So once this stock goes up to 140, 145, I'll be getting out of these at a profit, small profit, and just kind of re-establish a different position. But as you can see, I do have 120 puts here. That was a decent entry, but let's kind of go into what exactly I would do. So if you wanted to play earnings, but also have enough premium and time to be right, I would go out to the end of June, right, June 27th, and you could be pretty aggressive here, okay? You could sell the 36 delta, 34 to the 40 delta anywhere in here, okay? And you're still getting a nice discount on the stock. So if you wanted to be super aggressive going into earnings, but you don't want to do a leaps play and risk potentially losing that money or having to be stuck in something that's not paying you daily, I would go to the 40 delta cash secured put. That's the 128 strike. You're going to collect $615. Let's do the math on that. So 615 divided by 128, that's a 4.8% return in 35 days, okay? Massive return there. And if the stock does happen to go down, okay, you'll get a little discount on there and get the shares at 128, but at least you got paid to get that discount versus you buy leaps. If it goes down, that's not good because you're not getting paid. You're actually losing money daily on those, okay? So I think that's the safest play. So I'm not gonna even go over the leaps today. I think that is gonna be the most aggressive and safest play as far as playing for an up move, okay? So let's kind of take a look at where you'd get the shares if it did go down. 128's right here, okay? Which from all-time highs is a nice discount, right? From all-time highs. That's about a 16% discount from there. Okay, and then from recent highs, that would be about a 6% discount. So not bad. The risk to reward there is pretty good, and you're still getting paid 4.8% to basically sell that put. So I like Nvidia there, and I do think they're actually going to have great, not only great earnings, but the stock is actually going to go in the right direction because of those earnings. Just based off all the deals, the Saudi deals, the super pods that they're offering to commercial businesses that want to build out their own in-house AI infrastructure. You know, there's too many good things on the horizon for Nvidia, as well as, you know, Tesla, Elon even announcing that they're going to continue to purchase more chips, especially as they start developing their Optimus robots and robo-taxis. So that's going to be the second play is Nvidia. All right, let's go ahead and get into the third play. HIMS is providing an interesting opportunity here. Cash secured puts are going to be the safest, but again, you're going to need about $5,000 in collateral to sell a cash secured put. But right now, you know, is an interesting time for a leaps option. Now, I told myself I probably wasn't going to do leaps, but because it took a nice nosedive here, I did get into the leaps yesterday. So we're not profitable on these yet. Okay, we're at about a negative 72 P&L, but I did grab 4 Jan 15, 2027 50 call options. The reason I went out 2 years is because if I'm absolutely wrong on these, I will hold them like synthetic stock because I like the stock. Good fundamentals, okay? So let's go over a leaps play. You could do the same ones as me. I think those are pretty safe, and you'd be getting basically an entry where I got in, right? You'd be getting, actually, if you got them today, you'd be at a better entry than me. On Monday, who knows? But, you know, the $50, the 50 strike call, 76 delta is a good one to go for 2 years out, okay? Jan 15, 2027. But again, those decay about $1.76 a day. Not that much, but keep that in mind. This is not a, you know, this is not going to pay you if the stock doesn't go up. The stock has to go up. Now, what I prefer to do is the cash secured put. So as you can see, I have the 49s, the 48s, and the 45s. These are paying me $2,700, $1,200, $1,400. You know, free income right there, guaranteed income. So what I like to do is I would probably go out 35 days, okay? And if you want to be safe, you know, go 20 delta. So you can go to the 44 strike and collect $209. Let's do the math on that. So 209 divided by 44, it's going to pay out 4.7% return, okay? If you multiply that by 12 annualized, that's 57% a year on your money for selling very safe 21 delta puts on HIMS, okay? So I like that play. That's going to be my play for HIMS. Again, if you got assigned, I mean, you'd be getting the stock all the way down here at 44. Massive discount from the recent highs. From recent highs, that's about a 33% discount, so not bad there. You'd be building out a good long-term stock position and collecting income on the way. But if you want something more high risk, absolutely high risk, I would actually told my members not to follow me on it unless they're willing to see a 50% downswing on their leaps. But you could do a leaps play here and ride it up. My exit point is going to be probably somewhere around the 62 to 64, somewhere between 60 and 64, somewhere in this range. I want to see, you know, next week, if we pop up there, I'm up 20 to 40%, I'm going to take it and just take it off the table as a quick, you know, quick run. And then I'll take that money, take that profit, and I'll roll it back into cash secured puts somewhere at the, you know, $49, $48 level. Okay. So that's what I like to do with the leaps is I look at it as, hey, I'm getting ahead 5 to 10 months in premium by making a profit there. And then I rolled that money back into something safer like a cash secured put on the stock. So, you know, wonderful entry here. And Monday, I'm sure will provide that opportunity if you want to get in there. HIMS, again, this company is amazing, right? The double-digit growth, triple-digit growth, actually, and the PE ratio is still very decent for a high-growth company, a high flyer, 79 PE ratio. So really loving HIMS. Millionaires will be made off this stock, especially, okay? The next two, so the next one is going to be Hood. This one is my favorite one to play both cash secured puts and leaps on because it's very predictable, but we haven't quite gotten the pullback that I wanted. So I got out of my leaps that I got here when the stock was at 58. I got out at 65, like right when it hit 65, I got out. And then of course, bounced off the all-time high for a nice little pullback. What I'm looking for on Hood, okay, I'm looking for a specific entry here, which is gonna be the $61 level, okay? If we get that, that would be my first entry, okay? For maybe $10,000 to $15,000 worth of leaps. Second entry will be this $57 level, okay? So if we get this nice little pullback, if the market does pull back, QQQ comes down to 500, then this might be probable, all right? And then we'll ride these back up. Now, let's kind of go over that because I want to talk specifics as far as strike prices and everything like that goes. As you can see, I have many cash secured puts, 23 of them to be exact, 58s, and 55s. Collecting over $6,000 actually. No, $5,300 for next month, okay, in income off Hood. So we'll talk about the cash secured puts first, 35 days out. Again, you can go pretty aggressive with these. 30 delta is fine. You could go to the 58s like I did, and let's do the math there. So you're gonna collect 285 divided by 58, 4.9% return on your money, so almost 5%. That's why I like this company, have it in the portfolio. PE ratio is wonderful. The PE right now is 36, okay? That's close to Apple, right? It's close to Apple. So this company is earning so much money and the valuations are great and they're gonna continue to grow, so I really like it there. So the 58 puts are semi-aggressive. You might get assigned if you want something a little safer. Just go down to the 20 delta. You're still gonna collect 2.5% on these, okay? On the 54s, and that will get you safer. That'll get you down, let's grab this. That'll get you down all the way here, okay? That's gonna be a safe play for, for a beginner. If you're new to this, if you wanna just keep it safe, this is a great level to get assigned at or just to play for a cash secured put for income, okay? So that's gonna be the level there. Now let's talk about a leaps on Hood because it is kind of lining up for one. So I'll probably go out 2 years, Jan 15th, 2027. And I'll just grab the 70 delta. There is no 70 delta here. So we'll just go to the 75 delta, which would be the 55 strike. But if we go down to 61 on Monday, okay, the 75 delta may be the 50 strike, all right? So you're gonna pay $2,900 to control 100 shares versus 6,200, right? And on that, where I will ride that, I will ride it for a quick 20 to 40% return in 1 to 4 weeks, okay, on Hood. And again, I will probably get out again at the $65 level right before it hits the all-time highs, because when it does hit the all-time highs, there could be another little pullback there. And I just don't want to wait through that, okay? So there could be another pullback before it resumes higher, or it kind of just trades sideways here in this range for a little bit. So yeah, that's my play on Robinhood. Now let's go into the last stock, Palantir, another so close to a leaps opportunity. Obviously, I have a bunch of cash secured puts on Palantir. We have the 113s, the 117s, and the 115s. We'll click in there. And we're collecting for next month about $4,600 in guaranteed income, which is great. But this one, I'm looking for more of a leaps play, okay? I think if we could get into this box between 115 and below 120, even if we're at 119, I could have caught it the other day, but if we're at 119, 118, somewhere in there, that will be a good play to ride this up from here, okay? Back up past 125, maybe even to 128, 129, and we'll get out for a quick 20 to 40% profit there, okay? So that's something that I'm playing. Again, you're probably asking, well, why do you do the leaps? And let me dive into that, okay? So I'll probably go out on these September 18, 2026, 483 days out. That's gonna be the best play. Let's just, I'm trying to get the options chain to be working here. So we'll just go out 2 years, okay, for example. I'll grab the 70 delta, so the 115s here. And these decay about $3.20 per day, okay? And I have plenty of time to be right. If I'm absolutely wrong, Palantir has some bad news and it dips down to 100 for some reason, right? I could just hold these until they're profitable in a year or 6 months or 3 months, right? But no one knows, right? So that's why I go out very far, because it's decaying at $3.21 per day versus most people are buying these like 60 days out, 80 days out. If we go here to the 56 day out, These 70 deltas, okay, are decaying about $9.72 a day. So 3 times faster they're decaying, and you have less time to be right. So if you're absolutely wrong, your money is trash on these. You're gonna lose your money. This is gambling, right? So that's why I go out very far in time, because it's more of like a long-term stock position. I'm leveraging my money to control 100 shares, but I have plenty of time to be right. So again, I like those. If I were to go 400, the options chain's not working really well, but I'll probably grab the 115s for 4,200 bucks. Okay. If we do get into that green zone on Palantir between 115 and let's just call it 119 to be safe, okay? That's for next week. So if you enjoy these updates, give it a thumbs up. That really helps this video get boost in the algorithm. And I will see you in the next video. I'm gonna link another one right here, and take care.